Hey there, Lincoln here from bullacademy.org. It's been a while since we've done one of these videos, and I miss doing these less straight to the point videos where I just talk about what's on my mind and just share my thoughts and worldview with all of you. So if you've been missing these videos too, let me know in the comments below. If you all would like me to come back to more freestyle videos instead of being more straight to the point, I would love to do that. However, I've been very busy recently, a lot more busy than usual, because I did get a new job back in March, and although that was March, I've been working on big projects and even increasingly bigger projects at my new job, and it's going well. So that's going well. I have my house that I bought also back in March, been renovating that. COVID's been slowing everything down. Projects that would take 6 months are now taking 18, 24 months if you project it out. And of course, working with contractors, working with these Home Depot and Lowe's, not the greatest experience. Home Depot's a lot better than Lowe's, but I'll tell you guys more about that later on if you guys are interested in that, home renovations and working with contractors and real estate. It can be fun, but it's also lots of stress and headache and just frustration. But we're getting through it. As you can see, my office is coming together, so I'm enjoying where I'm at this moment, but I do want to say I have slowed down on my videos, and I recognize that, and I'm sure you do too. But the reason I've done that is because I want to get out more high quality videos to all of you, and on a more consistent basis, on a schedule that you all can rely on and know that I'm going to publish a new video when the day comes every week, so that you can be ready for and have something to look forward to on this channel. So I've been trying to hit Mondays, and sometimes I do Wednesday, but I'm still trying to figure out what my day will be. It might be Monday, might be Wednesday, and in the morning around 11 a.m., maybe 12 p.m. Eastern time. So that's what I'm looking at right now. I'm trying to find content that I can structure in a way that is presentable and enjoyable, and is meaningful and impactful to all of you out there trying to learn how to invest for the long term, right? One of the reasons I'm more comfortable doing these once per week videos, because not much happens on the market from week to week. Everyone wants to pump out videos every single day with the latest news, but the market doesn't change that often in meaningful ways. When you're investing, you're going to put money down, and is going to go to work for you. Businesses don't change that often from day to day. They don't change that much from day to day. So look at your own job. You go to work, you do your job, you go home. It's not really much happening between that time, right? Every week. So maybe every quarter something big might happen, or you have some big news to report. That's why we do quarterly reports, not weekly reports. Right? Businesses don't come out every week and say, oh, we made this much money last week and we did this last week. No, we did something. We spent a whole quarter doing these things, and it produced these material results that investors care about and want to hear about. So there's really not that much to talk about. People are going to produce content because they get paid to produce content, and there's nothing wrong with that. I would love to produce more content. It's enjoyable. I enjoy talking to all of you. At one point, I was doing that. I was doing a couple videos a week, sometimes more than once a day, but I just can't do that right now because of many projects going on in the background. I haven't shared with all of you here, but I will at some point when it makes sense. But just stay tuned for that. Let me know if you're interested in hearing more about my life and what I'm working on in the background, aside from the stock market and what I tell you on here. But anyway, I will continue to produce videos, so do keep subscribing. I appreciate you all who have stuck with me. I know that there's many other channels out there that you can watch, and they'll produce content every single day, but I'm trying to be the one that produces more of a higher quality, longer term focused catalog of content that you all can rely on to learn about various topics in the market and building long-term wealth, right? Because again, it takes time. You'll put your money to work today, and it will take another year, 2, 5, 10 years to see some really material returns, right? And results. In the start, you might see some big changes from month to month, from year to year. But over the long term, it might take years for your positions to really move the way you would like them to become a millionaire, right? Become a millionaire doesn't happen over a year, over 2 years in most cases. Of course, you can get lucky, and that's great, right? We've all been very fortunate. Of course, in the time of misfortune, we've all been fortunate to be in the stock market after the markets crashed last year in March and April. So we've all had a chance to really, if you bought in at that time when the markets were down, we all had a chance to really see some appreciation in our portfolio value. Some of us have 10x, 20x, and it's been very meaningful for us, but that doesn't happen often. That's once every decade or so. But even though huge opportunities like that don't happen as often as we would like, we do get opportunities every single day, every single week, month, year. Like today. Today, the stock market is down big. My portfolio is down at least 7%. That's a lot. So that means I have a 7% discount on my investments. I can go buy my stocks at a 7% discount. That's what I like to see. I don't like to see a bunch of green every single day. It's good to see your portfolio go up, but really, if you have time, if you're invested for the long term, you want to appreciate the days that your portfolio is down, because you can go in and double down on your positions at cheaper rates. If your portfolio is down 10%, that's a 10% discount that you can go buy your favorite companies at for the long term. That you can buy SoFi, Chargepoint, Cloudflare, whatever, Lucid Motors, whatever you're interested in, you can go buy those companies. Tattoo Chef, right? You can go buy your companies, your top convictions, for 10% less than you previously bought it, for 20% if your portfolio has been hit hard. So don't look at red days as bad days. It's very red. And there's many reasons that you can look for, and people will tell you that, oh, it's China, oh, it's the futures are down, the SPACs are being hit hard because people don't like SPACs, and whatever else. There's so many reasons that people will give you, and many of them may be valid, right? And of course, a lot of this is just opinion. No one knows for sure what's happening on the market at any given time, right? It could be the Federal Reserve's having a meeting, which they plan to on Tuesday, and it's going to be for 2 days. Or it could be the government doesn't know how to balance their books. They don't know how to keep the government running, keep it funded so that they don't have to shut down. Or it could be a shortage in the supply chain of the global economy. There are many reasons as to why in the short term the markets go down and they go up, which is why you shouldn't be so focused on the short term. You shouldn't care too much about what happens from day to day. Just find the best companies that you believe are the best, right? That you have reason and knowledge that tells you they are going to have the best chance of success over the long term, right? And then, as we've discussed here on this channel for over a year now, we practice the bull mentality. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hope for the long term. Because that's how we give ourselves the best chance of success on the stock market. That's it. We buy and we hold. Anyone who's been around for some time knows that a long-term strategy, investment strategy, is the best. There's no disputing that. You can ask anyone, Warren Buffett, Peter Lynch, Mark Cuban, whoever you want. Ask your mom and dad, because they invested. They might have bought a house when the markets were down. They might have started a small business 20 years ago, and now today is paying for their kids' college fund. That's an investment. It takes a long time to pay off. Over the journey, it's gonna be rocky. So on these red days, just look at your companies and say, hey, are you still making money? Do you still plan to make money tomorrow? How much are you gonna make tomorrow? How fast are you growing those revenues? What else can you do tomorrow? What business units haven't you ventured into yet that would make sense in the future? How can you vertically integrate? How can you centralize services? How can you increase your margins, right? How can you increase customer loyalty? If you can think through all of those for your companies and find the answers that make sense, If your company has given those answers, then great. If they haven't, then that's fine. You need to figure out if they can make it happen, if it makes sense still. And usually, from week to week, month to month, not much will change in those answers. So you won't have to do that too often. But if you do it every month, every quarter, and the market goes down between those times, you just keep buying and you keep holding. It's that simple. I haven't talked about my portfolio in a while, and I plan to at some point, but I'm taking very high risk. I am very much risk on, and at any moment I could be washed out. So I know how it feels to be scared, right? But you have to do it scared. You have to do it scared. Everyone is fearful. We all have fear. But the ones who do it despite the fear are the ones who end up on top. Even if you fall, you will likely end up better than those who never tried. Those who didn't stick to it because they saw some red and had to sell out their whole position because they wanted to protect themselves from, risk. They wanted to secure what they've already lost. They couldn't hold on because it was too scary. There was just way too many discounts on the market. The sale sign was too intimidating for them. And that's not to say that there's never a good time to sell. There are good times to sell. There are times that it makes sense to sell and move on from a position. But it's not when the market is crashing and you're just panicking. If you're going to sell, have a good reason and make sure it was pre-planned, not because the market is falling and you're trying to catch your falling knife so that it doesn't fall any further. Because that is a knife. It's going to hurt. If you try to stop a knife from falling midair, it will probably hurt you more than if you just let it fall and then assess it, figure out if the knife can be repaired and if it can be turned into something positive, into a rose over the long term. And if it can, you keep holding it. If it can't, if you've determined that it doesn't make sense to keep holding on to this knife because you can't turn it into a rose, because you don't believe it's going to ever turn into a rose, then okay, that's fine. You thought through it and now you can sell it. But never when the market's just crashing. Never when everyone's telling you the market is going to have a great reset and there's going to be inflation and sell everything because Michael Burry, the big short, says that something XYZ is going to happen in the future and he's called it all. Don't listen to all of that. Most times they're going to be wrong. It's going to be once in a while that they will be right, but before that time comes, they would have gotten it wrong over 400 times. So, yeah, just hold on. Unless you've been planning, unless you had a strategy in place for this moment, and you know exactly what you're going to do, just hold on. Close the app, close Robinhood, close Webull. Just let it be. Check it back tomorrow. Maybe it will be green, and then you will say, oh, I want to buy it now because it's green. But that's probably not the best strategy either, because if it's going up crazy tomorrow, then you should have bought yesterday when it was going down crazy, when it was red. It's better to buy on red days than it is to buy on green days. You don't want to buy on momentum. You don't want to sell on fear just because of those two things. You have to have more reasons than that. So sometimes it makes sense to buy when it's going up, and sometimes it makes sense to sell when it's going down. But a good reason is not panicking. So let's get to some quick news the reason I'm making this video is because I wanted to touch on these things. I wanted to talk about Lucid Motors and their EPA rating. They got a 520 miles rating for a charge. They crushed Tesla. They completely crushed them. What's that guy's name? Warren something on YouTube. He is a stan of Elon Musk and Tesla. I love Tesla too, but this guy is really drinking the Kool-Aid, right? And I was having a conversation with him in his comments at some point a few weeks ago, and he was telling me how, Lucid's a fraud. He was telling his audience that.
Quick update on Lucid Motors. Is it a scam? Is it a fraud? Is it for real?
And my question was, wait, why don't you just wait and see if they produce something? They haven't produced anything yet. They haven't missed their deadlines. They haven't shown any reason for someone to say they're a fraud, right? So I was just arguing, hey, let's wait and see what Lucid can do. And if it does become clear that they are a fraud, then we can call them a fraud, but they haven't done anything yet. So let them figure it out. Of course, his fans were on me, telling me, oh, it's a fraud. And of course I was arguing, what about Tesla and their full self-driving claim that is going to get them in trouble at some point. And they said,
doesn't look like anything to me.
They said, we don't see any problem here. Tesla's great. Elon's great. There's no fraud.
They cannot see the things that will hurt them. I've spared them that. Their lives are blissful. In a way, their existence is purer than ours, freed of the burden of self-doubt.
The only fraud happening here is Lucid, because we think Lucid is bad, Tesla is good. That was the whole conversation, really. And of course, he threatened to block me, but it's all right. That's fine. So I'm glad to see Lucid is crushing it. Obviously, they have more than vaporware. They have an actual car that drives. And apparently, they drive the furthest. They drive the farthest on a single charge. Over 100 miles more than any Tesla. And they own of all the EVs on a mileage basis. Lucid Group, Lucid Motors, owns the top 6 cars with the top 6 range. Confirmed, certified by the EPA. So now it's just a matter of time for them to produce the vehicles and get them sold into customers' hands, driving on the road, and then we can see how the market reacts to that. So people calling companies a fraud prematurely because they want to prop up another company such as Tesla. It's weird. Why even engage in that? It's such a weird thing to do. I don't understand it. Like, you don't have to tear down another person to compliment somebody else. So the same goes for companies. You don't have to tear down Lucid just to prop up complimenting Tesla. They can both be great. Appreciate the greatness of them both. That's fine. You don't have to be so tribal, right? There's enough space in this market. Tesla won't eat up the whole EV market. There's space for Lucid, there's space for Fisker and whoever else, Rivian. All of them can eat. And hopefully, you better hope that they all do eat, because we're in a fight against the ICE vehicles, not in a fight against each other, right? Elon released his patents for a reason, for that exact reason, to help the EV market grow. So if Elon's not tearing down other companies, why are you acting as his mouthpiece trying to tear down other companies? So congratulations to Lucid Motors and all of the investors like myself who continue to hold through all of the slander. Of course, the slander of SPACs. Everyone's saying, oh, SPACs are not legitimate. It's a vehicle. It's a vehicle. You go public through a SPAC, like you go public through a public offering or a direct listing. That's just a vehicle. Figure out the company. Look at the company. Does it make sense? Are they a legitimate team with something that is a legitimate product? And invest based on that, not based on some whatever vehicle they choose to go public with. Right? I don't know. Maybe I'm just lucky, but I've had a pretty good record of choosing what I believe to be the best SPACs out there. The companies that go public through a SPAC. I chose Tattoo Chef. I chose Chargepoint. I chose Open Door. I chose CCIV, Lucid Motors. I chose SoFi, IPOE. They're all doing very well. They're hitting their marks that they said they would. They're exceeding it. Chargepoint, crushing it. They raised guidance for the year because that's how well they're doing so well that they say, oh, we're doing way better than we expected to do. SoFi, they could have done the same thing for the last quarter, but of course they had a problem with the student loans moratorium. But they're still keeping their guidance. Open door, beating market expectations. Lucid, the highest range EVs out there, top 6, all to Lucid. I'm top 10, and you better believe that I'm not 7 through 10, right? That's what Lucid says, because there's 6, 5, 4, 3, 2, and 1. That's how legitimate they are. And then you have SoFi last night. SoFi was trending on Twitter because of the SoFi Stadium. You had Irvin Magic Johnson tweeting about how he was at the SoFi Stadium. You had LeBron James doing the same thing. You had the whole United States, whoever was interested in the Chargers football team and was at the stadium, was tweeting about the SoFi Stadium. And that is going to help exponentially increase their name recognition over time. So I consider this naming rights for the stadium a very smart investment by Anthony Noto, who was previously the CFO of the NFL. So he probably pulled some strings to get this because he realized how big of a deal it is. That investment is showing to pay off because SoFi was trending on Twitter for a very long time last night in the USA. SoFi, just the name SoFi was. If you run on Twitter, you will see SoFi in the right corner of your screen in the trending list. They were maybe second to last on the list. That's not even the team. That's not even the football team that was trending. It was SoFi trending, just SoFi. And on top of it, it said NFL. Not the Chargers, not Los Angeles, not Magic Johnson, not LeBron James, SoFi. So when you see that, you say, oh, what's SoFi? You go check out their site, SoFi.com. Or you Google SoFi. What is SoFi? You Google that, and you say, oh, they have checking accounts that pay you higher interest than banks. They pay you more than 0.01%. And you can get a home mortgage, and you can refinance your student loans, and you can get a car refinance, and you can save, you can invest in the stock market and cryptos. Why haven't I started using this thing? This SoFi thing. That's how name recognition works. When you see something, you look it up. If you haven't seen it before, you find out and you try it. Or you see it one time, then you forget about it, but you see it again in the future at the next football game when it's trending again next week. And you say, okay, I should check out SoFi. People are talking about this thing, I should check out what it is. And then you fall in love with it, and then 6 months later, they offer you a home mortgage because 65% of their home mortgages originate from their existing members on their app, which is free revenues. They don't have to market for that. They already have that customer. So they just say, hey, here's a home mortgage because we know what you need, because we know all your finances. So now 6 months later, after hearing about SoFi because of an NFL game, you are getting a home mortgage through SoFi. That's great. The point is, I am very happy with what the companies I've chosen, the ones that have gone through SPACs, despite what everyone else wants to tell you about SPACs. They're working out pretty well for me. Even if they're down right now, I'm down lots on SoFi. I'm way down on SoFi right now, right? I didn't get them at the best price. That was my worst entrance into a SPAC. But I am buying this for years out, right? And even for next year when they finally get their bank charter, which it seems we're getting very close to, because people are coming out putting SoFi Bank as their employer on LinkedIn. And we've seen who the first president of SoFi Bank will be because of his LinkedIn post. So once we get approval for that bank charter, I see SoFi stock appreciating very rapidly, like we saw with Square and with Varo. Varo, who was the first neobank to get their bank charter approved, and they're on a private market. And after doing that, within a year, their valuation 5x'd. And they're much smaller than SoFi. And guess what? They're a SoFi customer because they use Galileo to run their bank. So like I said previously in my video on SoFi being everywhere in the future. Regardless of whether people use SoFi as customers of their app or they use another bank like Varo, they're going to be using SoFi because of Galileo, because SoFi owns Galileo, which owns about 90% of the market in the financial tech infrastructure space. So regardless of what people think about SPACs and SoFi and all of that, I'm looking for the long term. And if SoFi gets hammered today, I'm going to keep buying it. It's my largest position now, by far. And I will continue to hold this for the long term. So I'll talk more about this later in a more targeted video, but I just wanted to share my thoughts on SoFi and Galileo and Lucid Motors crushing everyone else in their EPA rating. It's very, very big news, if you can't tell already. So I am looking forward to seeing how Lucid moves forward to their production, actually getting cars out to customers. And before any of that happens, we're looking forward to Lucid's pre-production day at their factory, production factory, on the 27th. On September 27th, next week, they will be having media and customers and whoever else is a key person that they want to see their production process. They will have them at their factory and show off their process of producing the vehicles. And soon after that, we can expect them to actually start delivering vehicles. So there's lots of big news coming out soon for all these companies that I've discussed in this video. And I will be discussing this more in the future. So if you're interested in hearing more from me, do let me know in the comments below. Let me know what you're invested in. Let me know if you're still holding on to these companies: SoFi, Chargepoint, Tattoo, Chevrolet Condor, Lucid Motors, right? Let me know what you think about what we've discussed here, and if you will be buying or selling in the coming weeks and months, and how long you plan to hold these companies, right? I'm holding them for as long as it makes sense. Of course, you have to assess your companies every quarter, every year, and figure out if it still makes sense for you for the long term. And if it does, then you hold on and you keep buying. It's as simple as that. So I am looking forward to all of this big news coming out, and I hope you are too. Thank you for watching this video. I will be coming out, of course, every week with a video. So if you're interested in learning more about the stock market, investing, and of course, I plan to get into and the companies we've discussed here and many other companies, then do subscribe. And if you enjoyed this video, hit like below. Let me know so that I can gauge whether or not these videos are something that you are all interested in. And so that you don't miss any of our future videos, do hit the notification bell after you hit subscribe, and you will be notified whenever we publish a new video. And of course, as always, this video was brought to you by our patrons at patreon.boacademy.org. They support this channel financially and help me brainstorm new video ideas to share with all of you. And they keep this channel going because it's pretty hard to do a YouTube channel, and of course they both provided finances and they provided support and ongoing encouragement to me to let me know that this channel is making a material difference in somebody's life and I should keep it going. And we do all of this in our private Discord channel where we share knowledge and discuss the stock market in real time every day by sharing news, rumors, and new investment ideas so we can all do our own research and then come back together and collaborate. And it's great during these times where the market is crashing so that you can have someone to talk to and bounce ideas with one another. So if you're interested in all of that, I hope to see you over at patreon.boacademy.org. I'm Lincoln with boacademy.org. Thank you again and have a great day.